Well, I think that the sort of former of those, the notion that we get through this and there's probably quite a strong snapback, I think that's probably the sort of mainstream view that's probably the one that makes the most sense. After all, very few of us are experts in epidemics or in viruses, so I think we have to just look at the numbers in terms of the fact that there's a slowdown in the number of cases. That's obviously one of the things that's encouraging the market today. In terms of the stimulus, they have thrown an awful lot of money into the financial system just this week. And I think that we shouldn't underestimate their ability to do that. And in fact, if anything, I would argue that the Chinese authorities had been trying to avoid stimulating the economy towards the back end of last year. And in fact, so they probably do have room to do that. And I think we've seen that positively react today.
How strong is the feedback loop, though? Because if you look at what they've announced, it's mostly been liquidity measures. They announced that 1.2 trillion yuan. Obviously, that's a measure to help boost the stock market and stop people from panicking. But what's that going to mean for the broader economy? Is it actually going to make a difference to credit lending, industrial production, and other means of stimulating the economy here? Or is it just a means of stabilizing the financial markets?
I think it's a means of stabilizing the financial markets and sending a strong signal in the short term until they can get the economy back working normally. At the moment, you've got an awful lot of the economy that's effectively shut down, and you're seeing that in terms of Western companies pointing out their difficulties in the supply chain and the impact this is going to have on everything from theme parks in Shanghai to the makers of high-tech equipment. So I think doing this to sort of get us through this period of a big downturn, it makes perfect sense. If you look at past periods like this, there has tended to be a snapback, and I think that you would expect to see that. After all, these factories are still there, people will want to go back to work, and at that point I think things start to probably improve. So I think that should be the mainstream view, that we do get a bounce back. But there's no question that this has had a big impact. You shut down the second largest economy in the world, or a lot of it, for a couple of weeks. That's having a big impact in the short term for sure.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.